Hello, everyone. Just wanted to start the session today a little bit different. Well, not the session, but the recording. Today is May 31st, 2022. I wanted to walk you through the way that I approach my day trading activity. So I trade. I do have day trading strategy, and I use Renko charts, Renko. So we're going to go a little bit on that. So before we start, let me remind you a couple of things. You can subscribe to this channel, and also you don't forget to set up the alerts. So in that way, whenever I put a new video, you get alerted and you can see it right there. Again, you can do it in the icon below. Just subscribe and hit the alert. Also, if you like the video, just click the like button. That helps me also to grow this channel. And if you like it, that would tell me that I'm doing a good job. So hopefully you like the video. I am not a financial advisor, so what I do share in this channel is my personal trading strategy, and I wanted to go with you a little bit today on what are the principles I use on this one. So I have been trading for a while. And I have made so many mistakes that it's sometimes it's been a really big journey, and I have actually blown 3 accounts early in the game. So I'm gonna share with you my experience, and hopefully you can take advantage of this. So again, trading, especially futures, have a really potential. It has potential rewards that would be very gratifying if you know what you're doing. But also it has some large potential risks. So be aware of those before you put your own money there. If you have questions, you can put them in this channel down below in there, and I normally respond to those, and sometimes I let them stay there until I create a video, because some of the questions are not I cannot respond them right, typing. It would take a little bit longer, and they are very very good questions, and I prefer to make a video on that. Additionally, and I have received this question several times. If you see the description, there's a link to Apex funding. So this is what I use for trading. So free of risk. There's a coupon there for 50% discount on there. So if you use it, you would get 50%, and they have different sizes of accounts that you can trade. So this is the one that I use, and I do have multiple accounts. So when you see that I trade only one contract, if you multiply that for let's put a number for 2, let's say for 2 accounts, then that contract is actually 2 contracts that you're trading, is not one. And the reason why I do that is because I go for a low ball target, and I have used also runners, and those are really a good way to trade as well. But that sometimes I do it, and sometimes I just trade one contract depends on how I approach and how I see the day. So let's review this session or this day, and I'm gonna give you a little bit of a theoretical introduction first. So let's go ahead and do this. So first of all, the first thing that you have to do early in the morning is to identify what is the day bias. So what direction the market is going. So for that, I do a couple of things, right? I try to identify if the market is in compression. So if it's moving horizontally and overnight. So what has happened in the overnight session, and if I have a trending day or not. And then if I don't see any compression in action, then I look for expansions. So is the market going up, or it's a market going down? So those are the two areas that you have, right? So if the market is going up, then that is the bias is bullish. So I would go and put in critical areas. I'm gonna put bullish trades, and if it's bearish, then I'm gonna put bearish trades in critical areas. So basically, that would allow me to put the odds to my favor and move forward. Okay, so I first of all identify what the bias is, and also before all of that, I normally check the news, and what I do use for that one is let me see, it's Forex Factory, and let me show you that one right there, right? So today, for example, there were a couple of events here. 9 a.m. HPI and then at 9:45 there's the Chicago PMI, and then at 10 with the CV consumer confidence. So basically, I look at this. I look at this. I look at this times, and I put alerts in my computer, right? So so that's basically what I do. In here, right? I put alerts in my computer, so I'm alerted when before, about 5 to 10 minutes before. I actually use 5 minutes before the news, so I don't trade during those hours. Now, when I identify after I review the news or get prepared for those times, then identify what type of a day is going to be. Now, when I do that, then the other one is to add the analysis, which is identify the support and resistance levels. Because if I am bullish, I want to buy at support, right? If I am and then sell at resistance. If I am bearish, I'm gonna sell at support. I'm gonna sell at resistance, and I'm gonna buy at support. But so that's what I would do. So basically, I check and analyze the market using different techniques, right? So you can use channels. You can use levels of support, of resistance, triangles, etc., etc. So in that way, you identify what is happening in this one. If I'm horizontal, if I am compression, I want to know what is the resistance and what is the support of that range, right? So basically, that is what I do. I identify where I can buy and where I can sell, and then the next thing is to identify the setup. So basically, this is what you do. So are you gonna get a breakout of compression? So let's say that you're bearish, and then you identify this and this. You identify this bearish trend, and then you are at support. Are you really going to sell a breakout of compression to the bearish side? Probably the market already moved enough, right? So that is not the location of where you put the trade is critical, because if the market moved already and then you met the target, then it's rare that you are going to get a profit if you sell, in this case bearish at support, already moved to support. So it could move, but most likely it's not going to keep there. So you identify what is the setup. It's the market going to reverse? It's going to do a pullback? What is the market doing in the environment that you are? So basically, this is what you do, right? This is the order. So you go identify what is the bias, get the analysis in your chart, and then find what is the setup. Okay. So and then trade accordingly, and then basically it's critical that first you look for the setup, right? And you ask yourself, are we in the right place? So am I at support or resistance? It has the probability to move to the other side of the channel or the support or resistance that you're looking for, and then say in there you get it is adapted, or it is immersed in your bias that you're doing. So if you're bearish and you think that, or your bias is that the market is moving to the downside, don't put bullish trades. I mean, the market is moving to the downside, so look for bearish trades. Okay, so hopefully that makes sense. So this is the strategy. Okay, so one additional thing I wanted to explain today is about the Renko charts that I use. So basically, so there are two sizes of breaks that I use, or two Renko setups that I use, and I'm gonna explain the 2-5-10, which is what you have here in NinjaTrader 8, right? So basically, you have a tick trend, which is 2, an open offset, which is 5, and a tick reversal, which is in this case is 10. So for the small bars I use 2-5-10. For the large bars I use 4, so double these numbers, so 4, 10, 20, and then I for if you want to trade NQ, that one is a little bit more volatile. So what I would do is to increase that one to maybe 6 or 8, even 6 or 8, and then and I can give you. So okay, let me do that right away, so I can give you the sizes. So the for NQ could be 8, 20, 40, or 6, 14, 28. So there you go. Okay, so that would be on that one. So so what these numbers mean. So let me go there. So the 2 is the tick trend, so meaning that if the if the break moves 2 ticks above here, above this level here, then that is going to be considered that the break is trending. So this one is going to paint a new break, right? 5 is the offset. Okay, so in between is the distance in between this new bar and the close of the previous bar. So basically you do have in between the two of them, you would have a tick of or a amplitude in this case of 7. So that means that in case of crude oil, that would mean $70 basically. So when you enter a trade using this bar here, and then you have a trigger, whatever it is, you may be losing 1 tick here, so it's going to be right in there, it's going to be 6 ticks, right? So if this one reverses on you, then you're putting a risk of determined by the price that you entered, okay? And that one is given by the reversal. So if the tick reverses, then what is the reversal? So in this case, you have 10 ticks, and then it's going to paint this bar right here, and it's going to close at 10 ticks. Okay, so that would be $100 in case of crude oil to reverse, and then a little bit more. Basically, you have to give this one room, probably 1 or 2 ticks below for it to really close right here. This one, if you put one tick below, then it's going to close to at 11, right? So that is what it is on that one. So again, duplicate these numbers and you would have the large bars, or use this combination I gave you for NQ, okay? All right, so let's talk about how to apply this now, and I'm gonna show you a trade I did in ES today. Okay, so so this one here is the overnight. I painted this manually using this tool here. I painted a vertical line at 9:30 a.m. So it's a 9:31, well, 9:30 a.m. right there. Okay, so this is what I see here before the market opened. ES, I traded normally. I wait until the market opens, and then I see what's going on. In this case, what do I have here? I'm looking at a again. What did I say? I wanted to see first. So let's go back. So I'm gonna identify if I'm compression or in expansion, right? So let me go that. Let me close this, put it out of the way. Okay, so what do we have? We do have yesterday and the day before, the market was really bullish. So what is the bias here? That you know, that the market could go horizontal, but or in a compression, but what I really see is that the market is going down, right? So this is what I'm looking at. The market is doing is going. Is it going sideways? No, it's not going sideways. It's going to the downside. It's not in compression. It's actually an expansion. So what I do here is to create a channel, right? So the typical tool that everyone use and I use for trending markets are channels or lines of support and resistance that are diagonals, right? So let's paint this channel right here. And I have moved all the other indicators, moving averages, and all of that I use. Okay, so basically what you have here is this line of support in the downtrend. Okay, now you come here, and then from yesterday or overnight, right, you have that level of resistance right there. So to paint this channel, you can take it from the high there. That would be probably perfect. That is okay. And in overall, this one here is moving down. You agree with me, I guess, right? So the bias is down. This one is moving downside. Okay, so I'm ready to put a bullish, a bearish trend here. Okay, market open, and that is where I put it. And why here? Why here? Because there is right there is a level of resistance, and I am going to put a bearish trade at resistance, not at support. If I try to trade here or here or even here, that would be probably a mistake, right? So where is my trades? Where do I try to trade? If I trade before at 7 a.m., 7:12, then let's see. I would trade that one, and I would trade that one. I wouldn't trade this one to the downside or against the trend, which is a bullish trend when you put it there. Make sense? Hopefully it does. So okay, so now where do I put my stop? Okay, so I'm putting my stop when I enter here. I don't want this one to go in reverse on me. So the market could do this, right? It could go there and here, and then come and move to the upside right there, right? So where do I put the stop? I would put the stop right there or right there. Depends on my level of tolerance to risk, right? Or I would use one thing that it's called the five breaker rule, which is if the market moves and turns to the other side before the 5 ticks is completed, so you have 1, 2, 3, 4, 5, 6, which is going to be kind of that level right here. If it reverses, then I would be out of the trade. Okay, but in this case, my stop is going to be right above this thing. One thing that you could use that is very helpful is the ATR. So the ATR is a good indicator of how much the market is moving in this specific period. So look at it, and then check what is the ATR for let's say a tick of I use the 2000 tick chart also for ES, and I put it in one of my monitors, and that would help also to identify where you want to put the stop. Now, how about target? So basically, if you see here, this move comes from here all the way to there, right? So let me paint it in a different way. So I'm gonna paint it with this instead. So so the market really moved from resistance right there in a bearish trend. I put it a different way. Anyways, let's fix it. Let's fix it. Okay. Okay. So the market moved from there, from resistance, all the way to support in a bearish trend, right? Now, where do you think that the target of this move is going to be? Okay, is it fair to say that it's going to be at support as well? Maybe, right? But where do I go? Where am I going to put my stop when I'm trading only one contract? Okay, in the low ball, right? Where I see resistance, and where do I see resistance? I see resistance here. Let's put that one. So I see some resistance here, and I see some. And I see some resistance right there. Okay, so in this area, right, in this area I see some resistance, right there. Right there is some resistance. So where am I going to put my target? Am I going to wait all the way down? Maybe. And if I'm trailing, that would be okay. But if you want a safe target, nothing is totally safe, but less risk target, that would be right in that area right there. Okay, so that is what I did in this trade. Okay. So let's see, let's move this one to see what it did, and look at that. Look at that. Okay. So let's put it there. This one is what is called a measure move. Where do this one wants to go? Kind of like to the resistance. Okay, and then it started to move, and then it started to move sideways. So I'm okay. You know, that one was $475 move. That's good. So again, what did I do? Let's recap a little bit. So first of all, I established my bias. Okay, I'm bearish here. Second, I define the analysis or the instrument that I'm gonna use in this case, and there are different types, right? So I can use this ray here and say, okay, so this one is breaking there. Okay, so there's some levels of resistance. Also, I can use ray. I can I don't know, I can check. I don't see any there, but there's something there that I could use, right? If I want to go okay, let me see something. Everything is bullish in this chart. I mean, everything is bearish. So I'm going to hit it to the downside, not to the upside, right? Now it started to range a little bit, so it's in compression, and then moves to there, and then it tried to breaks, comes back, and then it started to range, right? So this one is kind of like the right move. We'll see what is happening later, but you see it started to range. So now we do have a different bias in the market, right? Started at 1021, the market has started to range and probably turn. It has not turned bullish yet, but it's kind of like in this range, and then later on move to the upside, and right now is there. Are we now bullish in this market? Well, no. Let me show you the where do I have it? Let me show you this other one I use. The 30 minutes. Yeah, 30 minutes chart. Okay. So are we bullish on this one? Well, market is going down, and then it's still below the cloud, and it's at a level of resistance, which is the 50 SMA on the 30 minutes chart. So it's at resistance. Is this going to keep moving up? Well, I don't know, but it's not bullish. Nothing is bullish in this. Well, unless you take a counter trend. You understand that this one here, this is a counter trend going up to the upside. Now the market has been bullish in a while, so it could be a bull flag, but it needs to prove that it can go higher from here, right? But it has not yet. The moving average is one question that you have to ask all the time, is what are these moving averages doing? And normally I use, if you have seen other videos, I use the 21, the 34, the 89, and the 89 and the 200. In this case, for the 30 minutes, I also put the 50 simple moving average. It seems that this one is a good a magnet for the market to go. So you have a so it could go higher, especially now because it's it's right in the upper side of this doji, but has not proven yet that can keep going higher. Needs to prove that first. Okay, so all right, so that's one trade again. That's the strategy I use. Now, if the market keeps moving up, then what would be the target? So let's say you go there and have this channel now. Where are you gonna buy this one, or where I would buy this one? Am I going to buy it here to face this resistance at this level, or am I going to buy it when it comes back down and face support? So always think in where is my setup forming. Is the setup forming in the in this area here? Is it forming in resistance? If I'm bearish, then I can take it. If it's forming in support, in bullish, then I can take it. So in this case, I need to wait to see what is going to be the reaction here in this area at support to take a bullish trade. Okay, so has not proven it yet. It needs to go up and then comes down. Okay, well, I hope you like the video. Remember to subscribe to my channel and hit the like button if this one was helpful, and make sure to visit the Apex Funding Trading. So especially if you're starting to trade, that is a good way to put yourself in a good spot and without risking your money. Okay, so thank you so much, and hope this video was helpful.